2020-22 was a very difficult year for equity markets, but also for, let's say, the more classic Western bond markets. I think an index of European bonds last year lost about 17% in value. But within the bond markets, emerging market bonds were a bright spot. It was even possible for European investors to achieve positive returns in emerging market bonds in 2022. This comes to a surprise to many, but not Econopolis, because we have already a positive view on emerging market bonds for quite some time. Most emerging markets already started to increase interest rates to fight inflation in 2021. And as such, emerging market bonds already had an attractive yield at the start of 2022. Moreover, some emerging market currencies benefited from the fact last year that commodity prices soared, such as, for example, the Brazilian real or the Mexican peso. Emerging market bonds that were issued or denominated in dollar, and that's quite an important part of the emerging market bond segment, also benefited in 2022 from the fact that the dollar increased in value compared to the euro. 2022 again showed that emerging market bonds are a good regional diversification to emerging market equities. Last year, I think in emerging market equity index lost approximately 15% in euro, and as I already said before, emerging market bonds offered positive returns for European investors in 2022. Why is this? That is because emerging market equities are much more situated in China than emerging market bonds. Chinese equities last year had a very, very difficult year because of local regulations, local economic problems, etc. But emerging market bonds are not so much situated in China, but much more, let's say, in Latin America or Eastern Europe. So from a regional perspective, emerging market bonds go well together in a diversified portfolio with emerging market equities. We continue to have a positive view on emerging market bonds. Why? It's still possible to find attractive yields in emerging market bonds without having to take excessive risks in terms of credit quality or duration. Short maturity local government bonds of, for example, Brazil or Mexico offer yields well above 10%, but even closer to home in high quality countries such as Czech Republic or Poland, it is easy to find yields above 5% on local government bonds that do not have too much maturity. Also, the segment of the emerging market bonds that are denominated in hard currencies, so emerging market bonds issued in dollar or in euro, also there we find more and more opportunities because in that segment last year interest rates rose quite significantly. So, examples of such countries with attractive emerging market bonds in hard currencies are Romania, Bulgaria, Serbia, etc. Of course, as for any investment, selectivity is very important, also in emerging market bonds. For Econopolis, emerging bonds are a key pillar of our bond investments for the long term, but we do prefer quality. We usually do not invest in the low quality emerging market bonds. Why? Because yes, in theory, these offer a very attractive yield, but in practice, we've seen that they more offer high risk than anything else. Moreover, it's still possible to find attractive yields in high quality emerging market bonds that we do not really need that segment of low quality emerging markets.